So we'll follow a similar format to previous years. We'll start with a scorecard on how we've done, and a very, very strong financial year for Glencore. Adjusted EBITDA of over $17 billion, made up predominantly, obviously, given our business structure of our industrial asset business of $13.2 billion. That, the biggest proportion of that coming out of our energy business, in particular our coal business. Coal had a very strong year, clearly lower than the previous year after the extreme highs we saw in 2022, given the geopolitical tensions and the higher energy markets, but still a very strong coal year and a pleasing result for coal. Metals a little bit weaker, as a result largely from weaker metal prices, particularly in cobalt and cobalt payables, and some weaker nickel and zinc prices. Our marketing, once again, achieving above the top end of our range. As you know, our EBIT range and guidance for marketing is $2.2 to $3.2 billion. So a very pleasing result of $3.5 billion above the top end of the range. We've done that a number of years in a row now. And the opportunities have been there in the market for it. We've seen arbitrage opportunities, we've seen higher vol, and that's allowed us to capitalize on these opportunities and post very good numbers. The other pleasing aspect about our marketing results this year is it's pretty much a 50-50 split between energy and metals. Metals coming back very strongly, so we're very happy to see all parts of the business contributing very strongly in the marketing business. Net debt at $4.9 billion. Steve will talk a little bit more about that later. And distributions to shareholders during the course of 2023, a little over $10 billion. So we've really paid back our shareholders, given back $6 billion in cash, approximately $6 billion in cash, and $4 billion by way of buybacks during the course of 2023. And then lastly, today we announce our dividend. As you all know, we have a very transparent and open dividend policy. We always pay $1 billion of cash from our marketing business and 25% of our equity-free cash flow out of our industrial business. So this is something that has clear transparency for the market. Much of the street expected this dividend. So it's a $1.6 billion return to shareholders. Now, obviously, in other years, we look at top-ups around our net debt target. But given the EVR transaction, the capital to be spent to once we close that transaction by Q3 of this year, and our intention later on to bring net debt down and spin out the business, we are not declaring any top-up, but this is our normal, transparent, and base dividend that we declare.
On the production side, 24, we pre-announced that already at the time of the production report a few weeks ago. Copper-based business is actually slightly growing, and that's before the 27 to 30 trend, as I'll say. We sold Cobar, that's the reason for the 23 to 24. And 25 to 26 is during that period that the Mount Isa copper operation reaches end of life, which was also announced. Mount Isa produced 69,000 tons of copper in 2023. So that moves out of the system in the 25-26 period. You do have some increases, particularly Kolwezi, as I said, in 26, and Mount Isa goes down. As we look towards 27-30, that period, we see Katanga, in particular, having been held back at a 220,000 tons per year, moving to the sort of 260, 270,000 as we get into 27. Some of that is land access, some of that is sort of advancements in stripping and ore access that we look in that business. And then clearly 27-30 is a period when we should hopefully start seeing some of deployment of capital towards some of those longer term, particularly brownfield ultimately. So El Pachón is obviously there as well. Gary will talk a lot about it, but the trend is higher in copper, where we have that 1 million tons per annum of expansion capability. Cobalt for now has been taken back a little bit in 24 on account of Mumi sort of slowing down some of its potential, both in cobalt and in copper. And then 25, 26, that could be brought back, obviously still subject to market conditions, but that's a working assumption that volumes step up again 25, 26. In zinc, you've got Zhairem in 24 being a positive movement. You've got Antamina having very low zinc variability, and particularly in 2024. You'd see it in Teck and BHP to the extent that they provide some of that, but just our share is about 50,000 tons of zinc lower just in 24. It then bounces back, Antamina. So it's very variable, very volatile, particularly on the zinc grades as it moves through its plan as well, and then gives up some of that again in 26. And zinc in 26, you've also got the Lady Loretta satellite operation at Mount Isa reaching its end of life. All that culminating, coal fairly steady through this next 3-year period, and then starting to move towards its decline, with 5 operations having closed in this more recent period, and you've got at least 7 reaching closure times towards the end of the 30s, and then meeting our 2035, part of our 50% reduction in complete emissions by 2035. Overall production, even ex-EVR, relatively flat. You can see in copper equivalent units. EVR, we put in there our 77% of the 25, so it's 20 million tons or so. And that adds 16% copper equivalent volume to this business, reasonably material as we look our way through.